I'd say we're not in the main run of the bull market. We're not there yet. We're recovering and setting up for it. What do you want? Let's say if we're 10x, we can't hang around forever. Yeah, anything can happen in these markets. I had a full model too, I had a full model when that broke. I know technically, in my view, it didn't break. Like the model only works during a bull market. And when that breaks, it's early signs of a bearish market. And it broke when $50,000 broke and then we cascaded down. And we're not actually in a bull market right now. We're setting up for a bull market because that model's not crossed over into a floor that will hold yet. With these new derivative instruments, like we crashed from 6,000 to 3,000 back in tail end of 2018, right? That's the power of derivatives. It was like 48 hours and a $3,000 50% drop. And that's going to break any model. Like my models work off on chain and fundamental spot demand, and you kind of think of that as like what the price will mean revert around. You can build a model around demand and supply on chain. That's where the long-term investors want to value it, and when it drops lower, then eventually they come in and they buy it up. And it gets too high, maybe they'll sell some. Everything else is a random walk of it used to be liquidations of retail on BitMEX. Now it's liquidation of retail on Binance. It's just crazy whipsawing, and there's no sense to the market other than this game of traders using huge leverage to take the other guys out. Until you get too far, you get too far out of that, the fundamentals do come in and people will spot buy. Like we did recently, when we had that latest pullback below 40, 42 on some exchanges. Retail bought that, really. They went and bought it spot. You can see that on chain. So the models work, but any kind of price target, it's risky business. And timing, like you say, this stuff is very much, no one can predict price and time. If you do it, you're lucky. If you do it consistently well, then you're probably a whale making sure that your bet wins, which you do in options market, right? We know that. Know that. I'm betting on this strike price. Let's make that happen. And then I get my cash out, and then I'll let it go find its norm again. So I'm going back to this whole time and price, which everyone on Twitter seems obsessed with. I get on a lot of shows and they say this price target, that price target, and it's like, no, I just gave a model, and that's what the model spits out on upper bound if we top out at this random date. But it doesn't matter for an investor. You don't really want to know time and date. That's kind of like the noob coming in going, when it hits this price, I'm going to sell. What you need to know, what's much more valuable is, are we currently in an area of strength? Yes, good, buy more. Is it softening? Okay, take that into consideration when I have to rebalance. Maybe I'm going to consider my risk. Everything is about adjusting your risk, your risk exposure. So yes, we're in a strong market, then we can allocate more. Yeah, I think so. And that's exactly what's happening this current week. And I'm seeing retail actually doing it. As it was dumping, the retailers were buying it up. The guys with anything under 1 Bitcoin was really sucking up those coins and moving into the wallets. So yeah, retail by the dip, accumulators are trading like geniuses through this. I mean, it's great, right? If you're not going to sell, we will never sell, Max Kaiser. You don't never sell, you're hodling, you're immune to this kind of fuckery by the big whale traders, and you buy the dip, you win on the other side. It's the other guys that want to take extreme risk and trading against them and getting squeezed out of the market that are giving the coins to the hodlers, and obviously the whale trader. That's the best. I mean, it hasn't changed through the years. The hodl strategy wins for retail. I think it's all kind of bad news because I can't see a 1-year bear market again. I think with the advent of this new sophistication in the market, it's a lot harder to get a mania and a blow off top, which when it gets that out of bounds, it takes a year to mean revert back to where it should be and go below and then come back up. I think what we've got right now is these big sort of collapses of 50% in a multi-month, maybe 3 or 4 months of recovery. Well, it took us 3 months and then another it's kind of here to stay, is my opinion. That I don't think we're going to have this 4-year blow off top and then 1-year gap. It's just the always on phase now. I'd say we're not in the main run of a bull market. Like there's a main run phase where it's just gonna go up. The momentum's strong. We're just coming out of reaccumulation. Like we just had this massive sell-off in May. The sideways reaccumulation has happened, and then there's that sort of tentative first climb out, and often there's another sort of accumulation, and then we're off to the races, and that's when everything's strong, and that's the main phase of the bull run. We're not there yet. We're recovering and setting up for it, and so I think we're not going to get that till 2022 early phase. January, February might be interesting, but yeah, we're still waiting. Yeah, it's just I think it's a waiting game that people don't like, and it's actually a very small part of the market that is that main bull run. It's most of it seems that nowadays is in the sideways ranging until we set up, and we've been doing that a long time now, and probably got another few months ahead before that's ready. You get that pent up demand to go really to sort of blow past the prior highs. It's going to take time, and there's a lot of money that needs to come in to push Bitcoin around these days. Significant money. What do you want? Let's say if we're 10x, so right, we're talking about effectively $5 trillion need to give us that 10x, 4 or 5 trillion. That's a lot of money, right? That's like the entire like financial cap of gold. Only a certain percentage is used financially, the rest is industrial. Right. The entire gold cap, financial cap, to push Bitcoin 10x. So we're really, I think that, when you think about it in that perspective, it's like, okay, we've got to be really set up to take capital away from equities, real estate, some of the big bond markets. I think that's starting to happen with the yields, but it's going to take time before that sort of pulls in next level of capital. We want to eat the capital in existing store of values. I'd be interested to hear like some of the more experienced people in the macro markets like Plan B, Raul Powell, see like what their views on is how Bitcoin will eat that size capital and the kind of path that it will weave. I think that'd be pretty interesting. We need more countries involved. El Salvador is one. That's great. Sovereign wealth, fiat of one country. But now we're at centralized risk because we've got one country. And so what if El Salvador's experiment goes bad? Yeah, so we need others immediately. So there's more of a decentralized network of nation states. So yeah, like sooner better than, like it's like now's the time.